Good morning. My name's Ryan Littlestone from forexflow.live. Here we are in uncharted territory, if you like. We've got absolutely bonkers markets at the moment. We've had rate cuts on a Friday evening. We've had rate cuts on a Sunday night. Things can't get much more potted than they are now. How do we trade it? That's the big question. At the moment, the volatility is through the roof, and that's making it very difficult to trust the charts, to trust the technicals. So we've got to learn to adjust to that. Today, I'm not giving you any real charts of any prices of any currencies because I can't trust them. I've been in this game for over 30 years, and this is probably the wildest events that we've seen happening. I've seen happening all this time. I'm mainly at the moment sitting on my hands, but there are still opportunities there about if you can catch a headline, if you can catch a move, catch a central bank action. So how do we gauge this? Well, one of the markets I look at to gauge is the VIX, which is the volatility index. Now, I've got the chart here of the weekly index, the monthly index. And as you can see, it's really in elevated levels, levels not seen for many years, not since the GFC, the global financial crisis. So this is a big indication of how volatile things are in the market. But even I don't need to tell you that. As I say, we've seen from the central banks what's been happening. So what we have to do, we have to listen to this volatility and we have to assign our trades and our trading analysis around that. So it is a case of you're sitting there watching the cable chart and it's moving in 50 pip clips. This morning in 1 minute it's trading up at 123.60, next minute it's trading at 122.50. That's pretty impossible for us to trade, and we're not in the mindset of gambling. So I don't want to punt on a trade. I don't want to guess, it's gone up 100 pips, I'm going to sell it in case it drops 100 pips. So what we have to do, we still remain looking at the charts, but you've got to be very careful. Pick the bigger, wider, stronger levels. We know there's wider levels, even if they seem far apart. One of the areas in the pound, for example, is cable. One of the areas in the pound is down at 120. That's a big old area. That's something to look at if we get down there. But as I say, looking at this VIX chart, volatility is through the roof, and that's something to look at to give an indication of when things might start calming down. If we see that index, getting back towards a 30 level, even under 20, that suggests that things are calming down. But that's going to be predicated by what happens with central banks, what happens with governments. Are they going to bring out fiscal measures to ease this virus concern? But also what happens with the virus itself. The virus doesn't know money. It doesn't get affected by rate cuts. It doesn't get affected by fiscal spending. It's a humane thing. It's a health thing. And so to put that into a trading context is very difficult. But that's what we have to deal with. So it's really going to be watching those sorts of headlines with the virus to see, is there a vaccine coming in? Is it going to work? Are cases slowing? Is the death rate going to be low? All these things that on a humane level we need to look at personally, but from a market perspective, we need to see how that's going in the volatility, because that's going to gauge how markets are going to be trading. So, as I say, watch your charts, but don't trust them as much as you would under normal circumstances. Look for the wider levels, move on to the daily, the weekly, the monthly chart. Pick your big areas, because with this volatility, there's every chance that we might see some of those areas. And those wider ranges are going to potentially be where we're going to see the bigger speed humps. It's no good looking at your 5 minute chart and the 55 moving average on that. It counts for nothing. So really, the best way to trade is watch the volatility. Don't go out on a limb. Don't go high on trades or big on trades. Maybe go smaller size and widen your stops just so you can build in a bit of that volatility. But the biggest lesson I can give right now, the biggest piece of advice is try and stay safe. And if you're not sure, then stay out. And as usual, I wish you well this week. Stay safe in both health and your trading.